Guys, this is Rudy coming to you live from Palm Beach in Florida. I had decided to take a break for a couple of weeks, and man, you guys gave me a lot of homework to do during that time I was away. So I need to catch up on some of the stuff. I have prepared a few different topics that we can chat about, and most of them relate to the homework that you guys gave me. And then, of course, we need to talk about the current conditions in the marketplace. What's going on? Why is energy crashing? So I might make a series of 3 or 4 videos now that I have a little bit of time. But I think in terms of catching up in relation to the homework that you gave me, there are a few things that I want to discuss, and I'm going to sort of knock them off one at a time, one topic at a time. So I'm going to make a few videos just to discuss some of the things that we chatted about over the past couple of weeks or so. In addition to just taking a break, I've also been training for a half marathon that I'm going to be running this Sunday, and running every day for an hour or two or whatever takes a lot of time. And for that reason, I haven't really been able to spend much time with you guys, But what I want to do is take a quick look back at the small cap energy stocks that I talked about in a previous video that I made probably now about 2 weeks ago. And what I did here is originally the video was the top 15 small cap energy stocks as selected by you guys. And what I've done now is I've stripped away a number of these energy companies for various reasons, some of them trading over the counter, for instance. I just removed them and then picked sort of, I don't want to call it my top 5 because it almost sounds like a recommendation, but certainly the 5 that potentially have the most interest to me. And I'm not even sure I have 5, but anyway, let's go into this one. What I'm going to do here is I'm going to go back to the date where I took the previous snapshot, which on this particular slide here, as you can see just underneath my little thumbnail picture, there was November the 18th. So, sort of, let's call it 2 weeks ago, you could buy Obsedian Energy, Obsedian, I'm sure I'm saying it correctly, but I'm not confident. It's a Canadian company. You could buy it for $7.68. sort of 2 weeks ago, and the PE ratio was around 4.3 at the time, and it was sitting sort of right in the middle of its 52-week range. Other than that, there are not too many compelling reasons for me to say don't buy this or do buy this, but it's certainly an interesting stock that was highlighted by one of you guys. So this was 2 weeks ago, and then just yesterday, I took the same snapshot again, and now you can buy it for $6.76. So if you look right at the top now, $6.76 is the asking price. And a week ago, it was $7.68. So if you waited, excuse me, a couple of weeks, then you could have saved yourself $1 in terms of how many shares you might have been inclined to invest in. And the PE ratio is now dipped below 4. Now, sometimes I say that the ratios in this particular example, the PE ratio is sometimes attractive for all the wrong reasons. In the case of most of these energy companies, I'm not going to make that statement because actually the majority of them look like a good buy. What you do need to perhaps do in addition to your normal due diligence is also look at the geography and see what it is in terms of the commodity that they're trading in. The Canadian stocks have been taking a pounding, so they've been beat up quite severely. But anyway, that's Obsidian Energy, so it's about $1 cheaper than what it was 2 weeks ago. How about Vermilion Energy? So this one I actually have looked at over a period of almost now 10 years or so. I've never actually opened a position in Vermilion Energy. Once again, on November 18th, so a couple of weeks ago, you could buy for $19.40. Currently, you can buy for $17.89. So it's $1.50 below that price where it was 2 weeks ago. So if you had bought it for $19.40, you're probably feeling a little bit right now because you're down $1.50. On the other hand, if you're thinking now's a good time to open a position in Vermilion Energy, also a Canadian company, mid-cap, this is not a small company. It's got a market cap of $3.2 billion, and the PE ratio very attractively priced now at around 3.44. Also sitting in the middle of its 52-week range. Is it going to go up from here or down from here? Who knows, right? The compelling reason for you to buy it might be different for me than what it is for you or for someone else. You certainly are probably not going to be buying it for its dividend because the dividend is only yielding 1.2%. Fair institutional holding and not a lot of shorts on Vermilion Energy, but you can buy it now for $17.89. 89. So it's a little bit further discounted from where it was 2 weeks ago. How about this one? So there's always an outlier, and I like to find the outliers. This one is YPF, based in Argentina. Now, 2 weeks ago, when I looked at this one, you could buy it for $7.38. And now, if you wanted to buy it, this is as of yesterday, it was $7.65. So it's actually gone up a bit. But if we look at the November 18th snapshot here, $3 billion company, PE ratio only 2, right? But it was trading sort of on the high side of its 52-week range. Now the PE ratio is only 2.19. You can buy it for $7.65. So it's a little bit more expensive than what it was a couple of weeks ago. And this is an outlier because most of the energy stocks have actually pulled back and gone down a little. And this one is slightly higher. Still sitting sort of, at the near the top of that 52-week range, which was a price of $8.85. But this one definitely, as I said, is an outlier. All the other ones that I shared in the previous 15 small cap energy stocks that I shared, all of them pulled back except for YPF. So that's definitely an outlier. How about Nine? A lot of people ask me about Nine, and there's a lot of interest in this particular company. It might be a good time to open a position in Nine Energy. Always, as I've said many times before, it's very difficult to time the market. Time spent in the market is better than trying to time the market. But if you look at this one on November 18th, it was trading at $10.30, and now you can buy it for $8.86. So again, you got a sort of a $1.50 discount from where we were just 2 weeks ago on Nine Energy. A couple of red flags here. Even 2 weeks ago, it was trading at its 52-week high. And of course, this company is not profitable. But then you can look at some other metrics related to the company in terms of its debt and its operational earnings and things like that, and decide whether it's good for you from that point of view or not. As we are today, or here we are today, we have a price now at $8.86. If you had owned Nine Energy over the past 1 year or so, you did exceptionally well. So you're probably not complaining at all, because look at the percentage uptick that you've had on this one. So pretty good, right? So even though it's pulled back sharply, if you were long on Nine Energy, you're happy. I'm sure you are. And if you wanted to open a position and you didn't open a position 2 weeks ago, now you can buy it at a better price. Where do we go from here? Is $8.86 going to go to $7.50? Possibly, yes. Is it going to go back up to 10 or above? Possibly, yes. JP Morgan famously once said, when someone asked him what the market was going to do the next day, he said, if it doesn't go up, it will go down. So that's pretty much where it's at. Nobody can tell you where it's going. How about Sandridge? So it was almost at $20 on November 18th, 2 weeks ago. And the PE ratio quite attractively priced at 4.3. So $20 for Sandridge also seems like a pretty good price, especially with a PE of only 4.3. And it was sitting nicely sort of teed up in the middle of its range between $9 and $30. And now you can buy it for $18.27. So there's a greater discount in play for you. So if you looked at this, and as I said, these snapshots are from yesterday, it's December 6th, today is December 7th. You got a PE ratio of around 4. It's sitting left of center in terms of its 52-week range. So there's probably a little bit of run rate for you here. This particular company, Sandridge, actually seems quite attractively priced. In fact, all 5 of the stocks that I just talked about seem quite attractively priced, regardless of the volatility in the energy sector right now. Right at this moment, just now, I'm fairly confident that the energy sector is still the only sector that is going to give you an almost guaranteed uptick, regardless of the, I know many people are saying, but hey, the futures are down to $74. Well, the futures are pricing January WTI at $74 or thereabouts. Nobody knows what WTI is going to run at in January. And in January, we sort of just edging really close to the winter in the northern hemisphere. And man, the fossil fuel consumption is going to spike. Never mind what happens in China, what happens in the Ukraine with the Russian war and all that kind of stuff. Energy is not a bad place to park some money. If you've got cash awaiting investment, you don't know where to put it, some of these stocks might be interesting to you. I have other stocks that I feel, especially for people who are perhaps more my age or thereabouts, that might be better buys, sort of lower risk, but also remember that lower risk very often means lower return, right? So for me, for instance, my cash awaiting investment, I would rather park it in XLE, which is a stock I'm going to cover in the next video, for example, as opposed to some of these small caps But then some of the small caps, you can buy them for like, $10 and they're going to go to $20, $30. So you potentially have an opportunity to make a much greater return. That just depends on your personal investment style, your current earnings, your age, whether you need the money, what the timeline is. Can you invest it for 3 or 5 years, or do you need to get in and out? If you're day trading, this channel is not for you. So that's not going to work. But anyway, you get where I'm going, right? So there's unique circumstances that impacts and affects every one of us. So just do the right thing that matches your investment narrative, your criteria, and which will be the best way for you to apply your cash awaiting investment. So this is the first one of a series of 3 videos I'm going to release over the next couple of days or so. But I did want to sort of go back to that 15 small cap energy stocks that I said I'm going to whittle down to about 3 or 5 or so. So I've just covered, I think, 5 of them. And then what I'm going to do in the next video is talk a little bit about some of the larger energy stocks and potential buys, including one that I have never spoken about before. So on that note, this is Mr. Oxy, for now, still Mr. Oxy, signing off saying thanks for watching. I'll be back soon with another one. Take care. Bye.